Hey guys, thanks for joining us today for our preview of Day Trade Smarts program. Today we'll teach you how to leverage yourself in the market, how to use our money to go into the market and keep anywhere from 60 to even 80% of that profit that you earn. Before we get started with that, I want to just do a quick sound check to make sure that everyone can hear me correctly. And I'm coming in loud and clear. So you'll notice there's a chat box on the right side of your screen there. If you want to just chat in, if you can hear me and if you can, see my screen, if everything looks okay, if you want to just chat. Thank you. Appreciate it. Excellent. Okay. All right, so here in a second, we'll get going. Again, one other thing I wanted to check on is what our audience looks like. How much experience do you guys have? Is there no experience, little experience, and in what markets and for how long? If you guys want to chat that in. Awesome. See some Forex there and futures, some stock traders in here, a lot of new people. Awesome. Excellent. Well, that's great. I look forward to showing you guys what we have to offer here. I think you guys will really appreciate it. For those of you that have been in the market, a lot of this, with the exception of our proprietary system, may look very familiar. For those of you that have never experienced the market, have never traded before, I'll go ahead and explain kind of what we're looking at and go from there. So first thing I want to do is kind of show you guys our system and how we use that to leverage in the market. And so what we're looking at is the ES mini market. This is the S&P minis. Basically, you can trade as little as a quarter point on this market. What we're looking at are candlesticks here, these red and green bars here. The wicks on these candlesticks represent how high the market went for that time frame. So these long, thin wicks here, and then the thin shadows at the bottom represent how low the market went for that time frame. The body of the candle is going to represent the open and the close of that candle. So a red candle opens at the top and then goes down, closes, and then moves over to the next candle, so on and so forth and so on. So you'll notice here this red candle kind of went up for a minute and then came down, closed at the bottom here, went on to the green candle, which went from bottom to top, went about that high, settled, and then went on to the next, so on and so forth and so on. Now, generally, when you're trading in this market, your broker will require for you to have a minimum of $2,500 to $5,000 deposited in order to leverage one contract in this market. And what that does is when you leverage that contract, for every quarter point that the market goes in your favor with one per contract, you'll earn $12.50 profit. Now, our broker actually allows us to only have a $500 minimum deposit in order to leverage one contract. So we're going to use the same math and just say we have a $2,500 deposit. So today we're going to be using 5 contracts. Is 500 5 times is $2,500, and so we're going to use 5 contracts today. Now, basically, what we're going to be looking for is for these lines here, the major and the minor, and I'll explain to you what these are in just a second. We're going to wait for these lines to reside below this thick red line right here, which represents the overbought portion of the market, oversold portion of the market. Sorry. Now, the green and red lines here, these thin green and red lines down here, these represent the majors. These are the big players in the market, billion, trillion-dollar banks, institutions, large investors, so on and so forth. That's what's represented in those two lines. The gray and black line actually represent the minors in the market. That's the smaller players, folks that have, obviously not billions and trillions that are leveraging the market. But day traders, smaller investors, so on and so forth, are made up within that gray and black, those gray and black lines. So what we want just for them to reside oversold like they have been, and then kind of do what they're doing now, which is agree in one direction for just a moment. And that's double cross and point up. And so if that remained that way, we would go ahead and get into a buy trade. for just a half a point. So we're just going to go for a half a point. Now, again, this market moves in quarter point increments. So 24.68, if it moved up a quarter point, it would go to 24.68.25, and down it would go to 24.67.75, so on and so forth. Now, obviously, within one of these candles, it can move more than a quarter point, but that's the increment in which it moves. So what we're going to do is we're going to kind of wait to see if these both agree and double cross and point up, and then that candle ends. So if the candle ends and they look that way, then we're going to go ahead and take a buy. Otherwise, we're going to wait until we get them to agree in that respect. Same thing when they reside overbought. We want them to cross down and remain that way for the duration of that candle, and then we'd actually sell in that instance. Overbought, when they reside overbought, generally means they're due to give back, to sell. Doesn't mean they're going to sell right away, nor does it mean they're going to sell aggressively. Same thing with the oversold. When they reside down here, it means they got to kind of buy. But again, it doesn't mean they're going to do it aggressively, nor does it mean they're going to do it right away. I'm just going to kind of hover here, because if that candle does end with that cross, then we're going to want to take advantage of that. So let's wait for that and see if we can get a double cross on the post there. Oh, it kind of softened there at the end. I was just about to push the button. It kind of softened. So let's see if it'll do it on this next candle. We want to wait for that double cross and for them to agree. You notice right there at the very end, it kind of pulled back and decided that it was going to hold off. So we're going to wait for that and then see if we can get in on the next candle possibly, now that we reside oversold. One thing that I really appreciated when I first started trading was that, first of all, my experience in trading before seeing this program was basically 401k, right? I didn't have a lot of experience in the market. And so I understood it like most people understand it. You wait for the stock to go really low, and then you buy it when it's really low, and then as it goes up, you make all kinds of profit, and things are peachy keen. But what's great about day trading and leveraging yourself intraday in the market is that whether the market's going up or down, you can actually make profit. So that was really an eye-opener for me. It wasn't something that I realized initially when I first started trading or getting into the industry. So that was really refreshing. It's nice to know that regardless of the direction I'm going, I can still make some profit. So we're still going to wait for these to double cross. It looks like we don't have our double cross yet, so we're going to hold off for that here just for a second. It looks like the minors are still committed to the short. We want the majors to cross up like they're doing, but then we want the minors to do the same. And if we can get them to agree for just a second, then we'll go ahead and take a buy. It looks like the majors are really starting to pull the minors up. Now the major and minor are both crossed up. So we'll wait for this candle to end, and once this candle ends, we'll go ahead and jump in on a buy. So let's just give this just a little bit here, and if they remain that way, which it looks like they're pretty committed, then we're going to go ahead and take a buy, because they did come from the oversold. You can see they've kind of extended up, which is all right most of the time, as long as they previously resided oversold, which they did. So we're going to wait for that to kind of, post and remain that way. And then at that moment, we'll go ahead and enter into a buy trade for a half a point. So, again, the quarter point is the least amount of profit that you can take, but we'll be looking to take double that. We'll be taking just a half a point, so not much. We just got a few seconds left on this candle. So let's wait for that. And as soon as that posts, I'm going to press this buy button right here, which is going to put us into the market for a half a point buy. And you'll notice I'll have two lines, one where my trade entered and the other where my trade will exit. So let's wait for that. Just a couple more seconds here. All right, there's the post. Okay, so you'll notice this line is where I entered. That line is where I will exit. I have actually got to go through that line in order to take profit. And when we get profit, because we're using 5 contracts, that's $62.50 per quarter point. And if we're going for half a point, then it's $125 profit. So you're not ready to retire in Hawaii with $125, but it's great for just a couple of minutes of effort. And that's what's great about the program. It's simple. It's definitely not easy. There's a lot to learn. There's, the algorithm is something that, you have to grow accustomed to, but it is definitely simple, not by far and away easy. And this is not one of those, hey, tomorrow you're going to be a millionaire type of thing. We are very astute about being conservative, limiting our market exposure within the market. We don't want to, over leverage. So we're good about proper money management. We always have exit strategies in place, so on and so forth. And those are things that we teach our members on a regular basis. So we've been in this one just for a couple, not too long here. Going to wait for that one to fill. And then we should be looking to set up for potentially a sell as we get overbought. And you can see now we're overbought. And okay, we're out of that trade, and you can see we've got a profit of $125 here. So now that we reside overbought, we want to wait for these lines again to start to cross and point down together, and then remain that way for the end of whichever candle it does that on, and then we'll go ahead and try to short the market at that point. So we'll kind of wait for that setup. It looks like some of you have traded in this market before. Others in other markets, and that's great. That's awesome. These indicators are ones that you can use in just about any market. We've got equities traders and options and Forex traders. We do a lot of Forex trading. And the reason for that is because it's 24 hours a day, 5 days a week. And so for those that have jobs as they're learning how to trade and what have you, it looks like we got a double cross here forming. Let's see if it holds. You can trade it just about any time. 24 hours a day from Sunday at 5 o'clock Eastern to Friday at 5 o'clock Eastern. You can just pick a time. Because there's various banks that are open across the world, you're going to be able to find a currency pair that has enough volatility that it's going to be quick ins and outs. So it's very conducive for individuals that are time restrictive. When I first started doing this, I was working 60, 70 hours a week. I really didn't have a lot of time. And I fit it in wherever I possibly could. And now it's to the point where I don't have to do anything else. I've changed my financial trajectory, and it's because of this system, this program. So we're still waiting for that double cross to the short side. Short is sell, long is buy. For those of you that aren't familiar with the terminology. So again, we want for these majors to cross down, the green to cross below the red, and then the gray to cross below the black. And in that instant, we'll go ahead and look to sell. So we got a bit of it happening. Well, we did for a second there, and it looks like kind of softened up on us. So again, that's why we want to wait for them to agree and remain that way and post until the next candle comes out, because we know that they're committed to that direction for at least a short spell, at least for half a point, which is all we're looking for. The signals that we're showing you today, just these double crosses, are really basic. They're the really simple signal that we could teach anyone day one when they come into our organization, and they can learn almost instantly and execute. It looks like we had a double cross. Let's see if that'll hold. If it does, then we'll go ahead and sell. So we've got it right now. Let's see if it holds out for us. But there are many more signals and indications that we can get for various markets that allow you to not only be able to trade more often, have more or better picks, and trades that are perhaps larger. But for the sake of this demonstration, without having to get too complicated, we want to just show you some really simple signals. So it looks like that one didn't really carry through the previous double cross. So we're going to see if we can catch one as it continues to run up. And you can see we are looking to sell, to go down, even though the market's moved up quite a bit. But nonetheless, we're going to be looking to try to get some sell out of this. So it looks like we're starting to, miners are starting to short or sell, cross down, right? Majors haven't quite committed yet. It looks like they're a little more committed now. Let's see if that'll hold out. And if it does hold out for the duration of this candle, then we'll go ahead and press the sell button, and that will put us into a short move or a sell move for half a point. So let's hold out for that. We just got a few more seconds here, and we should see if we'll be able to see if this is going to remain. You can see majors are kind of playing that back and forth there. Let's see, just almost to the bottom of the candle here. All right, let's see. It looks like it's trying to make up its mind. Okay, it looks pretty steady. We may go ahead and jump in on this one. It's soft cross, but let's go ahead and jump in on it. It wasn't ideal. You can see that the majors did cross and the minors did cross. They weren't overly committed, but nonetheless, we should be able to get out of that as it retraces to the sell side. Again, you can see this is my entry up here, and as it goes down, I can make profit. But again, the price has to go through this line in order to take me out profitable. And you'll notice the PL up here. This is going to show, this shows profit and loss. So you can see it's 0 when we're pretty much at break even. If it goes above that line, it'll show negative numbers. Obviously, it's not going to, we're not losing that. We haven't lost that until the trade closes. And so if it goes enough against us, then we can make the decision to pull that trade at a loss. Otherwise, it just kind of hangs out, with a negative number there until it starts to return to profit. So you can see there it's actually going negative a little bit. Maybe we were a little too preemptive, but I think we're still good. It's still we should still be able to get out of that trade profitably. So we're going to wait on that for just a little bit here. You can see as it came back down, now we're back in profit. Now we haven't taken profit. We haven't gotten out of this trade with profit in hand, nor have we gotten out of it with loss either. So as it kind of ebbs and flows, it just gives it room to breathe for just a second. And then as it picks its overall or its direction, there we go. That one came out and gave us the profit. So you can see there, 2 trades, $125 each, $250. Let's try to do one more here. And then we'll kind of go into explaining how the system, the program works. If you guys have any questions at this point, I see that there are some questions going through. Hopefully my admins are doing a good job of answering those questions for you. Generally, I don't have an opportunity to look over and actually read the question as I'm explaining things. So, but again, if you have questions, feel free to ask them, and my admins will make sure to get those answered for you in the background there. Okay, so now we want to, there's a couple things we want to wait for. We want to wait for these lines to now head below this red line and then start to cross up, and then we'll try to take another buy. Otherwise, we want them to kind of get above the blue line again and then become overbought and then start to go down again, in which case we'd short or we'd sell. But I think preferably or ideally what we'd want to do is hold out for these to get below this red line, because it looks like we're starting to trend up a little bit. And so ideally we want them to kind of settle down here and then give us a signal to buy and go up or go long. And so then we can take another half a point to the long side. So let's see if we can get that to happen here. Wait for these to expire. Okay, now we're oversold. Good. So again, we want to wait for the minors to cross up and then the majors to also cross up. And when they do that, then we're going to go ahead and take a buy and see if we can get another half a point before we move on to explaining how our program breaks down. Okay, let's see here. Again, some of the other signals that we have are much more complex, but they're much more valuable as well. You can get longer movements out of them using different time charts and different indications. But again, these are transcendent. They can be used in multiple markets, and a lot of times the very, very same signal or indication. But the better you become with the indicators, then the more proficient you are across multiple markets. But if you have your pick, if you have one that you really like, or if you haven't decided yet and you want to try something out, this is a great place to start. We teach our members a lot of disciplines that are universal in the market, and in the industry. But we also have the most leading indicators in the industry to back it up. Our traders are trading at 80, even 90% win rates, and their losers are minimal because we're teaching them to be conservative and consistent versus trying to break the bank all in one trade. So it looks like we're getting a double cross here. Let's see if that holds. But consistency is going to be worth more in the long haul. Being conservative and making smart trades and just taking a little bit of the market every day. Right, we don't have to make $1 million in one day. We can grow it slowly and steadily. Most of our members, when they first start, are doing anywhere from 1 to 2% daily returns, and then after they get their feet wet, we got a double cross here. Okay, we're gonna go ahead and buy. After they get their feet wet, then they're able to take much more than that. 2, 4, 5% out of the market on a daily basis. And a lot of them will supplement their income and just trade full-time. When I say full-time, I mean our traders are only trading a couple hours a day, if that. I mean, some of our more seasoned traders are trading maybe half an hour, 45 minutes a day, taking their small cut of the market and calling it a day. And you can see that this is very powerful. These are very powerful tools, but we don't want to over leverage ourselves in the market. We don't want to have too much market exposure because that leaves you open to the risk factor. We don't want our traders to trade too often because you get trader fatigue, right? You start seeing things that you want to see as opposed to what's actually there. And so we want to be as conservative as possible. And slow and steady and to the right is how you get there, right? And that's why our traders are trading today, tomorrow, and into the foreseeable future, because they're not over leveraging themselves. They're not trying to break the bank all at once. And that's what we encourage our traders to do, and sometimes just in a few short months, 6 months, we're out of that trade as well. $375 profit for 3 trades. Took about 15 minutes or so to take that. So that, not too bad, right? Again, you're not going to go and buy a Mercedes-Benz with $375, but consider what you're doing right now. And if you could use a couple $100 extra in a day, even just $100, even just, a third of that, would that be something that would be beneficial to you? If the answer is yes, then perhaps this is the right program for you. What I want to do is show you how our program breaks down.
So the first thing we want to do is address some of the problems that we have. The problem with day trading and getting into day trading is inadequate training. Right? You don't have enough training. You don't have enough skill. Maybe you've Googled some things. You've looked online. Perhaps you've subscribed to some newsletters, but for the most part, it's inadequate. Right? They may teach you some methods on how to win, perhaps, or what have you, but the real problem comes in when you need to figure out how to mitigate a loser or the psychology of trading. There's a number of other things that are at stake when we're talking about day trading. Lack of professional support, right? So you're in a situation and your only option is to Google the question or hope that you can reach out to somebody and get an answer in a timely manner, right? So lack of professional support is a big one. Very archaic tools, things that you can get for free, like Bollinger Bands and things like that. Not that I'm dogging those things, but they're archaic. They're things that essentially rely exclusively on historical information, which is only accurate to maybe 60-70% of the time. And time restraints. You don't have all the time in the world to be able to day trade or leverage yourself in the market properly, or even train and study. A lot of us, when we first got started, we had other jobs until we could get to the point where we could trade for a living. So the solution is simple. We offer one-on-one coaching. We have coaches that are going to get to know who you are as an individual so that they can tailor an approach that's specific to you, to your personality, to your risk appetite, what trading strategy is going to be best suited for you, and cultivate that in you so that you're adequately prepared for the market, not some cookie cutter, hey, this works for everyone, let's just offer that to you and hope that it works. And in addition to that, we offer long-term help and support. So not only are we going to teach you, we're going to train you with one-on-one coaching, but we're going to offer long-term help and support. All of our members always have support via telephone or email or Trader Chat, which is a chat function that we have for our members that you can download onto your computer and onto your phone, your mobile devices, and so on. We have the most elite proprietary leading indicators in the industry. Like we said before, this used to be an opinion. This is actually something that's is closer to a fact in the sense that we've put them against the best in the industry, and we've always come out ahead. We have on-demand training courses so that you're able to watch whenever you'd like. It goes around your schedule. If you're available at midnight, 2, 3 a.m., you can go on, log into the back office as a member, and you can watch on-demand videos of past webinars and recorded training material. We have daily live webinar trainings where we are continuing that education. We're taking trades with our members on a regular basis. It's a very robust program. Markets that trade 24 hours a day, 5 days a week. The Forex market is open from Sunday at 5 p.m. Eastern Time to Friday at 5 p.m. Eastern Time. 24 hours a day between those times. 24 hours. So you're going to always be able to find a market that's moving, that has enough volatility that you're able to get in and out of trades effectively. And we have mutually aligned benefits. We want to provide a service that you're always going to see. You're always going to be able to see and experience that value in. It's going to be something that is a pivotal part of your growth as a trader. And so we'll talk a little bit more about mutually aligned benefits. What I want to do is talk to you about some of the programs that we have for individuals.